Hello, everyone. Welcome back to my channel. If you're new here, I'm Joe, a licensed, certified public accountant with over 10 years' experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Today, we're going to expand on last week's balance sheets posting for our financial statement series here in the fourth quarter for all the December 31st year-end businesses and show you how to reconcile your bank statements, which sounds fancy, but is actually a simple way to make sure your money records match what the bank say. Whether you're managing your personal finances or a small business, this skill can help you catch mistakes, spot fraud, and keep your money organized. Be sure to subscribe to our YouTube channel and check out our blog site where we post every Monday, Wednesday, and Friday. First, what does it mean to reconcile a bank statement? Basically, it means comparing your personal records, like your checkbook or accounting software, to the bank records for the same period. You want to make sure your records and the bank's records match up perfectly. If they don't, you'll find out why and fix the problem. So, why should you reconcile your bank statements? And why is it important? Reconciling your bank's statements helps you to catch bank errors or fraudulent charges, spot transactions you forgot to record, avoid overdrafts by knowing your true balance, and staying on top of your spending. It's like double checking your work so you know exactly where your money is. Next, what do we need to get started? Before you start, you're going to need to gather your latest bank statement, whether it's paper or from online, your personal financial records, whether it's your checkbook, your spreadsheet, or from your accounting software from your business, a calculator, or just use your phone's calculator app, and a pen and paper if you're doing it manually. So here's a sample monthly bank reconciliation that we're going to work on just to show you guys. Just remember that depending on your accounting software or if you are using this by Excel, yours may look a little different, but we're just trying to get the concept down of what we're doing um, for example purposes. So, step one is to check our opening balance on our bank statement and match it to the closing balance from your last reconciliation. So, what we're going to do first before we do step one is we're going to put the date for the month and um, that we're doing the reconciliation for. It's very important so that way we're not just doing reconciliations, but we don't know which month we're doing it for. So September has recently ended. We're just going to use September as our example. So the first thing we're going to do is going to put our bank statement date. It's going to be 9/30/2025. And usually what I found in my practice is most business bank statements are usually available around between the 5th and the 10th of each month. Could be earlier, could be later, depending on um, the banking that you're using and what their cycle is. But typically, it's usually between the 5th and the 10th day of the month is when the previous month's bank statement will be available. So next, we're going to put, like I said in step one, we're going to put our ending balance from our bank statement. Remember, this is from your bank statement. So just to make up numbers, we're going to say our ending bank statement uh, from our uh, from our bank statement it was $1,000. Next, we're going to want to put in our books ending statement. So this is the balance per your book. So whatever your accounting software, or if you're using Excel, whatever you're using, if you're doing it by hand, whatever that is, that's what this number is going to be. It's not going to be the bank because we're going to reconcile. So we're going to say that our ending book balance was $2,000. So as you can see, we have a difference of $1,000 that we have to reconcile. This difference should always be zero. If it's not zero, it's okay if it's off by like anything under, depending on what your operating procedures are for your accounting. But if it's okay if it's off by, I've seen some places where it's off by $10 every month. Usually we'll just put that as a miscellaneous or put it down to something else we could write off. But you don't want it to be off by $100 or to remain at this $1,000. You really want it to be a very small nominal, non-material amount. Um, so for us right now, we're off by $1,000, but we're going to reconcile. That is what our purpose is right now. So Again, depending on the software that you're using, it's going to be a little bit different than what we're using here. We're just using this for as an example. So the first thing we're going to do is we're going to add our deposit in transit. So these are deposits that haven't hit the bank yet, but we've sent them out to the bank, but they just haven't cleared and shown up in our bank statement. Or it could be a timing difference where we sent it in on maybe the 29th or the 30th of the month, but it may not clear until the first or the second after the bank statement has already been cut. So we're gonna say we'll say we made a deposit on the 27th that didn't clear. It's still in transit. It's still in transit. Just hasn't cleared the bank of $1,000. We'll say we had another deposit. We'll say on the 27th as well. That hasn't cleared yet. And we'll say for this one, the deposit will be for $200. And then we'll have another deposit that was on the 30th, and that one we'll say was 500. And then we had another deposit we'll say was on the 30th, and that one will be for 1200. So all total, we have $2,900 in deposits that are still in transit that we can see on our books, but they haven't reflected into the bank statement yet. So they're not. We're not going to find them on a bank statement because we recorded it on our books, but we're not seeing it in the bank yet because it hasn't cleared the bank yet. So it won't show up until the next month. And then when the next month comes, we'll clear those deposits. They won't even hit our reconciliation. So we have $2,900. Which brings our subtotal to $3,900. We just added our ending bank balance to our deposits in transit, which gives us 3,900. So now our difference is 1,900. Remember, we had $1,000 difference, and our difference went up by $900. So we have a $1,900 difference, and that is because next we're going to go to those checks that are still outstanding. So these are checks that we've sent out to our vendors, we sent out to our suppliers, or we sent out to whoever, whether it's a loan or our debt payments, whatever we made, but they just haven't on the other end, the vendor or the supplier hasn't cashed that check yet, or if they did cash it, maybe it just hasn't transponded to our bank account yet. So that's what these are. These are what we call checks outstanding. So there's we have them recorded on our books, but the bank knows nothing about them because they haven't either they haven't been deposited by our vendor or our supplier, or B, they just haven't transponded yet on the bank and they haven't shown up. So we'll say we have check number 9485 just to make stuff up. This isn't a real thing, we're just making it up. We'll say for $900 that's outstanding, and then we'll say 94 and we'll just skip it just to show you guys that that's okay. So a lot of times you have these check numbers will skip or they'll be missing, and that's okay. That really helps you out to know like what's outstanding if you're keeping good track records of your check numbers to know what is still outstanding and what has been cashed. So we'll say that that was for $1,000. Okay, and we have outstanding checks of $1,000. So when we compare the two, when we take our 2,900, we subtract it from our our 1,900. That puts us at a computed book balance of $2,000, which when we subtract these two, our computed book balance minus our balance per our books, we get zero. And that's what we want. We want a zero difference at the end when we're doing our reconciliations each month. Okay. So this is a little bit above and outside of the scope of the things that we do here at JMC Accounting, but this is a book or bank to book reconciliation. And then there's another one called a book to bank reconciliation. So it would be the opposite way where we will reconcile all the items that are actually on the bank statement to our books. So instead of deposit in transit, it'll be deposits made. They won't be in transit. And then we'll list out all of our deposits. And then we'll have all the checks that were cleared. And then what we'll have to do is we'll just have to figure out what checks haven't cleared and what deposits are still in transit. And it'll just be the opposite. So instead of ending balance from the bank statement up here, it would actually be ending balance per our books will be up here. And all this instead of in transit, like I said, this will be deposits made. This will be checks cleared. And then down here where it says balance per your book, it would actually be our balance per our bank statement. And that would be our book to bank reconciliation. but this one is a bank to book reconciliation. Again, it's a little bit above, but I just want to give you guys the information so you know and can see that again. So after we reconcile our bank statement, and we still maybe we're not quite at that zero, maybe we still do have some nominal amounts that are outstanding. The next step is to identify and fix those discrepancies. So if your totals don't match, you're going to look for common causes, which this is usually it is. It's usually like bank fees that you didn't record, that's on the bank statements that you may not have put into. That's going to go on there. Outstanding checks or payments is like I said. If there's things an example we gave, we did a bank to book reconciliation. So now, if we're doing a book to bank reconciliation, which is where instead of starting out with our ending bank statement, we're starting out with our ending book balance, and then we're going through. We're going to make sure that those outstanding checks or payments are put on there, our deposits and transits. I think we kind of beat that up a little bit, and then we're also going to check for errors that may be in our record keeping. We're all human. We all make mistakes, and that is quite okay. And then we're going to adjust your the records to fix the difference. If you see bank errors, make sure you contact your bank. So, in closing, we're going to want to make it a habit to reconcile your bank statements regularly. Ideally, you're going to want to do this about once a month for each month, just to make sure you're keeping good records and you're able to identify fraudulent charges and to make sure that your records are good and clean. And this also keeps you on top of your finances and helps you to catch those mistakes early rather than later. And that's it. Reconciliations don't have to be scary. It's just a way to make sure your money records are accurate and complete. If this video helped you, hit the like button. Got questions or want more step-by-step worksheets? Drop a comment below. I'm here to help. Join me next week where we'll break down what a profit and loss statement is as we continue through the financial statements. I'll see you. Don't forget to hit the subscribe button to check back for more videos on finances made simple. And don't forget to check out our blog site where we post every Monday, Wednesday, and Friday.